Hi, everyone. I'm Elysabeth Alfano, CEO of VegTech Invest. Welcome to another side in impact investing for change. Thank you to the New York Stock Exchange, which distributes this podcast. Hi, everyone. I'm Elysabeth Alfano, CEO of VegTech Invest. Welcome to another episode of Upside in Impact Investing for Change. Thank you to the New York Stock Exchange, which distributes this podcast on etfcentral.com, their podcast platform. Of course, you can always get this podcast on iTunes and Spotify. It's best to subscribe to never miss an episode. And of course, you can always leave a 5-star review. Those do help. You can find us on the VegTech Invest LinkedIn page. We are live on every episode right there. I'll tell you, here we are almost about to round the corner into April. And I still have memories from December of 2023. Now, if you remember, I speak at COP. I spoke at COP 27. Couldn't get anyone to talk to me about food systems transformation. I spoke 4 times at COP 28. And not only was there a day dedicated to food systems transformation, but food systems transformation discussions, particularly around financing food systems transformation, were permeated throughout the 12 days of the summit. I attended so many fascinating panels, and one of them had my guest today. And I've quoted him many a time, so I do not want to steal his thunder. I will let the words come right from his mouth. I want to bring on today's guest, Mahesh Roy, who is the Investor Strategies Program Director at the Institutional Investor Group on Climate Change. Mahesh joins me from London, I believe. Is this correct?
That's right. Great to be here.
Thank you for your time today. I've been trying to track you down since December, actually, because the words that you spoke at COP28 and after your panel, you and I had a chance to chat, really stayed with me. And I think they're pivotal for helping investors wrap their minds around what will most likely be a very fast transition in food systems. But before we get into all that, and of course, the investment thesis therein, let's backtrack and help everyone who might not know what IIGCC is, the Institutional Investor Group on Climate Change. Please tell us what that is.
Thanks, Elizabeth. IIGCC is a membership organisation. It was started by investors around 20 years ago. Currently, we have around 450 members who manage around $65 trillion in assets. These range from local pension funds to some of the world's largest asset managers. We focus on 3 main areas. Policy, where much of our work started in being the investor voice on climate change with policymakers and regulators. Then we have a corporate program. We are one of the investor network's leading Climate Action 100 Plus, which is the largest investor platform for engaging with some of the highest emitting listed companies globally. More recently, and probably more relevant to this conversation, we're one of the founding partners of Nature Action 100 Plus. It's a similar platform for investors to engage with corporates on addressing nature and biodiversity loss. Finally, we have our Investor Strategies program, which is the one that I have the privilege of leading. We work with investors on integrating climate change into their strategies. So we're maybe best known for founding the Net Zero Asset Managers Initiative and the Paris Aligned Asset Owners Initiative. And we produce the Net Zero Investment Framework, which is the most widely used framework for targets and transition plans by investors who have committed to net zero. Probably worth taking this opportunity to say that my comments today are my views and not necessarily those of IIGCC or its members. And of course, our members act individually in accordance with their own obligations to their clients, beneficiaries, and regulations within the jurisdictions in which they operate.
Mm-hmm. Wonderful. Thank you for that. I have so much to talk to you about today, but I do want to take a chance to backtrack already on what you've said. I just want to make sure that people can access some of these platforms. Would you be kind enough here, just so that we have it documented, and of course, for everyone listening on audio podcast, you can refer to the transcript on etfcentral.com, the New York Stock Exchange's podcast platform. This transcript will be written out in full, but I want people to have those websites. Can you read off the website link so that people have it?
Yes. So that there would be Climate Action, which is climateaction100.org. Then there is NA100, which is Nature Action 100, the number 100.org. and Net Zero Asset Managers, which is Net Zero Asset Managers, one word, .org. And you will be able to find resources for the Net Zero Investment Framework if you go to iigcc.org and search for NZIF.
Wonderful. Thank you for that. So some of the comments that stayed with me since COP28, December of 2023, were when you were on a panel with FAIR and the former ambassador to the United Nations Food and Agricultural Organization, the FAO, and you were saying that you thought food systems transformation was going to take place really quickly and that investors would be diving into this opportunity. Why do you think that is?
Well, I think I wouldn't go 100% to say that it will happen very quickly. I think what's promising is that it can happen very quickly and they can transition very quickly. So investors who have sort of signaled their commitment to aligning with the Paris Agreement, aligning their investment strategies with the Paris Agreement, are obviously looking at different sectors and different areas of focus in which they can help the transition. And if you look at the IPCC, the Intergovernmental Panel on Climate Change reports, their most recent one being AR6, you look at the different scenarios in the different sectors, the agriculture, forestry, and other land use, which food systems sort of fits under, is a sector that can transition, very quickly compared to, say, transport, which won't make it by 2050, energy systems, which we hope will make it by 2050, and real estate, which will be well past 2050. There is the ability for food systems to transform in a way that is net zero, by 2030. And due to the increased sort of, focus on nature, I mentioned Nature Action 100 plus Nature Action 100 that we launched recently now has over 200 signatories in just a year, engaging with 100 listed companies that sort of have the highest impact on nature. It shows that there's a real will to understand how to move this transition as quick as it can. But in saying that, the practicalities mean that there is other things that need to be considered. I think, you just have to look at the farmers' protests on the European continent recently, show that it isn't a given. But I think there is certainly if there is the will from policymakers and the will from investors to sort of lean into this transition, then it can happen very quickly. And my own personal opinion is that those things are starting to come together, and it will happen a lot quicker than people think.
And perhaps we'll say quicker on a relative scale, so quicker than the other industries, which people naturally think of energy and transportation first, usually, as the things to address climate change. And actually, sort of the little engine that could coming from behind, it's going to be food systems transformation, perhaps, that grows at a relatively fast scale to impact climate change. So let's synonymous with this, another thing that you said, which stayed with me, is that this sector is the only sector that can get to net zero by 2030. Now, I would say that those two comments are intertwined, that it will move quickly and that this sector can get to net zero by 2030. They're related in that it's that low-hanging fruit, if you will, of impacting climate change, which will drive investment into the sector, which will therefore force it to grow quickly. But I don't want to speak for you. Please, do I have it right that this is the sector that can reach net zero by 2030 and the only one?
Yeah, well, I think this is, once again, to caveat, that's not my analysis. I'm parroting the good work by the scientists in the Intergovernmental Panel on Climate Change that produced the Sixth Assessment Report. But yes, if you look at that report, and I think it's at the top of section 4 on page 60 in the longer report. If you want to go and Google IPCC 6AR, you'll see a diagram which shows the different main sectors, and this shows that agriculture, forestry, and other land use is the only sector that can transition by 2030. It can get halfway by 2025, and is well on its way actually to 2025. This is obviously because of land use and its effects on nature. It's not only a source of emissions, but it is a carbon sink when you're addressing land use change, including halting deforestation and looking at the sectors that are responsible for that and what needs to be done there. It's not like you're relying on any new technology or untested technology or the rollout of technology. It's simply a change in practices. And generally those changes in practices can lead to, sort of better financial outcomes and more efficiency as well. So all of those things sort of coming together mean that, one, as you've outlined, because there is a focus on climate and impact, and this being a sector that can change quickly, that sort of those two things coalescing together mean that there will be increased attention in this area, and there already is, as I've sort of outlined in the interest that we've had in addressing nature and biodiversity loss in financial portfolios, means that there's very likely to be a shift towards food system transformation in the coming future.
Mm-hmm. It's very exciting, although I would say, just anecdotally, that certainly prior to, let's say, the first half of 2023, coming out of COP27, very few people could follow my logic that food systems transformation was going to take place relatively quickly, be an important investment opportunity because of its ability to create wealth. When you have huge systems change, that's when you have real wealth creation. But you would have this huge systems transformation, which would then increase wealth due to its impact on climate change. Very few people could follow that conversation. Now I don't have to do so much explaining. People are starting to put that together in their own mind. Somewhere they've heard there's a connection between food systems and biodiversity loss, deforestation, climate change, and they're wanting to know more. So I feel that steps are being made. That said, I still feel that we are woefully behind. You seem to be, perhaps, again, not putting words in your mouth, but you're saying things like, we've already made some progress. And sometimes I wonder about that. Maybe if you could illuminate us a little bit on some of the progress that's been made, because I'm surprised to hear that we could meet 2025 goals in agriculture.
It's worth probably caveating that these assessment reports, even though it was only released a few years ago, are fairly backward looking. So I think it's using 2015 as a base year. I think that the progress that's been made is probably a little bit more distributed and isn't happening sort of systemically. However, a focus particularly in tropical areas where there's the greatest impact on reducing carbon emissions and also increasing carbon sinks, a focus particularly by investors on looking at supply chains of companies they invest in, or directly in those companies if they invest in them, in halting deforestation before 2025. Another initiative that doesn't have a website just as yet, but we've been working closely with the Climate Champions team on, is FSDA, is Finance Sector Deforestation Action, where a number of leading global investors are engaging with companies that have the greatest impact on deforestation, particularly in tropical areas. So I think the more of that happens, the more of that progress that happens, and if you start to, I don't have the numbers off the top of my head, but we've all heard of the football fields in the Amazon being destroyed at a great place at certain times. The quicker you halt those, the more greater impact you have on an exponential level, because not only do you have you stop the emissions being released, but you increase the carbon sequestration. Furthermore, investing in more cutting edge food tech style companies, or companies that have solutions, say like in the Netherlands, where they are obviously a very small footprint on the global scale, but the second largest agricultural exporter. As those sort of learnings start to spread throughout, because they are more efficient, because they are able to produce more food with less, then you see those learnings come to more broad-based companies in the ecosystem. You start to see those network effects starting to sort of increase the ability for those food systems to transform, to stop the conversion of natural ecosystems, and also things like regenerative agriculture and carbon sequestration within agriculture, and then other efforts around ecosystem restoration, afforestation and reforestation, starting to make that progress. And realistically, the duplication of or the learning from those case studies, and those being broadly systemically adopted, particularly when investors are engaging with the companies they invest in these types of efficiencies and these types of measures, means that it can sort of spread quite rapidly and have that overall impact.
I am going to act as a little mouse here and follow up on some crumbs, because I just want people to be able to maintain some key points of what you've said. Correct me if I have anything wrong here. So this is one of the sectors that can have the most impact, because it isn't necessary to have a large CapEx spend. A lot of halting deforestation, for example, not only halts the biodiversity loss, but in keeping those forests, you have the opportunity to capture. So you're stopping the damage and you're creating a sink. Stop and sink. So you're creating a sink that, or maintaining the sink that also captures. So you need less for pretty dramatic change, and therefore you can have impact quickly and you can have change quickly. And this is what would allow us to impact these numbers. So let's talk about some of these numbers. According to the United Nations Environmental Program, agriculture is 30% of greenhouse gas emissions. So you're just not going to impact climate change if you don't look at that 30% number. Animal agriculture specifically, 18% of that. So 60% of the 30, is 60% of that. Therefore, 18% of greenhouse gas emissions coming from that sector. It's a lot of deforestation, primarily happening in the tropics to make room to graze cattle and grow feed. So that number in particular, if you can address that 18% of greenhouse gas emissions coming from the agricultural sector specific to animal agriculture, you've made huge impact without spending that much money. Now, the soccer field, we say soccer field, you say football field. The soccer field stat of which you speak is coming from the World Resources Institute 2023 State of Climate Action Report, which says that, I believe, if I've got this correctly, 22 soccer fields every minute. 22 soccer fields every minute were destroyed in 2022. So that's the rate of deforestation, which leads me to say, thank you for your shareholder engagement around biodiversity loss, deforestation, et cetera. And I'm excited to hear that it sounds like you have support for this from your members and investors, kind of understand the impact here. Is that correct?
Yeah, I think so. And thank you for elucidating my comments with some very strong facts, and I believe they are all correct. Yes, and beyond this sort of the progressive and sort of leading investors that are working on things like FSDA and Nature Action 100, we've also just recently updated our guidance. I mentioned at the start the Net Zero Investment Framework, which is the most widely used framework by investors that have committed to net zero. We recently upgraded the NACE, the NACE codes, which is sort of an industry classification code, the one for agriculture, forestry, and fisheries, to a high impact sector. What that means effectively is that investors using this framework to assess the alignment of their assets against the Paris Agreement goals will need to hold companies in those sectors to the same standards of oil and gas companies and other high impact sectors as well. So that what that guidance sort of does is help those investors then figure out where they need to engage in their portfolios and then maybe make other asset allocation decisions as well. So when it comes to mainstreaming this, it's now sort of broadly recognized that the impact that can be had by engaging with companies on halting deforestation and stopping nature loss can have a huge effect and is actually a key part of their strategy in getting to net zero. Not just looking at power and energy systems transformation, which is absolutely important. I think the other side to that as well is the opportunity that you mentioned, the opportunity to scale this, and where there is a lot of bang for buck in investing. You mentioned the relatively low capex, even though changing the way an organization operates, whether that's tracking supply chains or different methods of agriculture, etc., still is less capex intensive than changing energy systems. And I think in that same report that I mentioned before from the IPCC, if you look at what's required in investment to actually help the transition, the ceiling is quite low. It's only 500 billion annually, which is still quite a lot of money, but it's not in the sort of trillions annually that you hear thrown around for the energy transition. The gap there, though, is actually larger because there's less being invested in it. So there needs to be somewhere between a 10 to 31 times increase in investment required for the transition of food systems. But the bang for buck is even bigger, because once you get up to that 500 billion, then you can actually see the system transform and transition and have huge climate impact. And obviously in that, as we've sort of discussed, there's huge efficiency gains. And generally, I'm not saying in all cases, but where there's efficiency gains, it's more profitable. And those companies will perform better. So there is a lot of win-wins across there. And as investors start to engage with these companies, start to understand in their portfolios, where the alignment is of those in those sectors, so agriculture, forestry, and fishery, or agriculture, forestry, and other land use, as the IPCC puts it, then you'll hopefully start to see that change starting to cascade through from a sort of compliance and alignment style into more. Well, there's actually opportunity here, because these companies can transition. It's not going to cost as much to transition them, and we're going to get a whole lot of impact in transitioning them as well.
Okay, so much to follow up on there as well. I just want to make sure everyone's processing all of the information. If I can distill it slightly down to some things I want people to remember. This swift change and this strong climate impact hinges on investing. One might say investing to the tune that we invest in a new energy economy, going to need to invest in a new food systems economy. I quote Geeta Sethi here, who's the World Bank's food systems expert, who says that while 30% of greenhouse gas emissions come from this sector, 60% of that to animal agriculture, this sector only gets 2.5 to 4% of the world's climate tech investment. So we're going to need to scale that 2.5 to 4% up to the 30% of the damage that it actually creates. She was mentioning between 300 billion and 500 billion a year for the next 10 to 15 years. Now, while that might seem like a lot of money, and just I'm underscoring exactly what you said, which is 500 billion. While that might seem like a lot of money, it's not the same kind of CapEx spend that one might need to shift the entire electrical grid, let's say, around the globe. So relatively speaking, the low-hanging fruit, lesser financial investment is needed, but it is needed. That is the hinge. We're going to have to invest to see these numbers really take fruition. The silver lining here is, as I see it, Mahesh, you let me know if you see it differently. Huge invest to get in now on food systems transformation. You talked about these novel technologies that are using less land, less water. I'll just, I have these stats off the top of my head, so I'll use them. A plant-based burger compared to an analog burger, you're looking at 97% less land use, 97% less water use, 90% fewer greenhouse gas emissions emitted, 37% less energy used. Kind of a fun topic for another day is that Venn diagram of overlapping of energy in transportation and fossil fuels and food. I think that's interesting. But so you're looking at major efficiencies, and where there is efficiency, that means better bottom lines. Forget morality and forget the environmental argument here. You're looking at huge efficiencies that's better for industry, that really trickles down to being better for consumers, in addition to the climate change impact. And that usually translates to being better for investors. But I also see it as, if investment is going from 2.5 or 4% to about 30%, that's also a great opportunity for investors. That means there's a jump in interest that usually, where there is demand, things usually go up. That means it's a very healthy place to be for investors. Be it in that ag tech, at VegTech Invest, we invest all along the supply chain. We really see the supply chain that's building out the infrastructure for this new system is where all the wealth is going to be created. And that can be anywhere from the very beginning, ag tech, to the ingredients used, to the flavor, texture on novel foods, to the synthetic biology, synbio, to the novel technologies utilized all the way at the end of the consumer packaged goods. So there's lots of opportunity anywhere in the supply chain to invest. Okay, before we move on, so much to discuss here. Something else that Geeta Sethi from the World Bank said is that she really sees food tech investing as climate tech investing. Do you see the same?
I think so, and there's obviously huge crossover between both the mitigation side and the adaptation and resilience side, and I think that's where almost all food tech investing, considering its dependence on land use and also water as well, which has a huge impact on adaptation and resilience. And so I think across climate, if we're looking at mitigation and adaptation and resilience, any technology that makes food and food systems more efficient can probably be couched as climate investment as well. And where it doesn't, it will have co-benefits, particularly on the adaptation and resilience side, when you think about the future of water and food scarcity that we're looking down the barrel of, even in the lower temperaturized scenarios, which we are all sort of working towards. So yeah, I would say that's a pretty good way of passing it, and also a way that will probably maybe confuse some people at first, but I think once as you've so clearly laid out on the different mechanisms by which it will impact both mitigation and adaptation resilience, start to bring it into focus once again for investors to think about, well, whilst this might be a broader secular shift that needs to happen for various reasons, if you marry that in with your climate goals, then it actually makes a lot of sense to look at this transition and this change now. And particularly for the World Bank, it's a great analogy because their initial mandate, or their founding mandate, has been on poverty alleviation, and climate is now starting to come into that lens as well. But if you're looking at poverty alleviation, then acting on climate change is a great way to ensure things like food security, water security, etc.
You and I could speak for many hours. I'll divert really quickly to talk about the Sustainable Development Goals of the United Nations. So food systems transformation, touching on human health, food insecurity, water, life on land, life underwater, climate change, at least 6, if not 7 of the SDGs, which is wonderful. We did talk about mitigation and adaptation, but you've hit on resilience. I just want to take a minute to say we all lived through COVID, and we saw how quickly those food supply chains fell apart. And places like Singapore, which is reliant on importing 90% of its food, went into panic mode, as did the Caribbean islands, as did the US. We all saw this as people started hoarding food and grocery stores were empty. So those resilient supply chains were back to efficiency, building better business models. You can even say, forget the environmental claims for now, just look at building a better supply chain to be more robust. And this, in the end, has less cost. It's what, again, we focus on at VegTech Invest, and we think that supply chain is really very interesting. I'll just circle back for a minute and say, you said we're looking down the barrel at water shortages. I would say we are here. Colorado and Arizona already fighting over water. I believe in the Middle East, it's a high concern. So it may not be in your town today, folks, but water issues are here, and that's only going to cascade. It's two sides of the same coin. Food systems can change really quickly, or if we don't invest and they don't change, the fall off is going to happen equally as quickly. Increased climate change, increased water concerns, this can all cascade pretty quickly. I don't want to be doom and gloom here, but I'll just say that that's possible. But before I once again quote the World Bank, I want to touch base on how much shareholder engagement you're doing, and just the success that you're having therein. We have shareholder engagement at VegTech Invest around building robust supply chains, and so protein diversification, just so that we're not all dependent on, it's funny when you think of food, it's maybe 5, 6, 7 major companies around the world. It's not like, sometimes I wonder how they get so much protection. It's not like we talk about an industry and we think, oh gosh, it's a huge industry, so many players. There are very few players, and they have enormous amounts of protection while putting out so much damage. A report from the FAO, Food and Agricultural Organization of the United Nations, says that $12.7 trillion of cost is externalized to the global taxpayer, resulting in 10% of GDP from food systems in our current state. Primarily 80% of that cost is from not being healthy, obesity, heart disease, diabetes, colorectal cancer, these large-scale lifestyle diseases keeping people from being productive. 20% of that 12.7 trillion is in environmental cost cleanup. So that's food systems as a whole. Certain animal agriculture is going to be that 60% of it, and other sectors are going to have their chunks of that 12.7 trillion. So I think, gosh, the society bears such a heavy burden and yet such amazing protections. But you feel that investors are quite ready to support shareholder engagement. So I'm pleased to hear that. Good. Okay. Anecdotally, I will say, because I'm in so many conversations like this, industry maybe reaps the most rewards of the protection today, but has the most to gain from tightening up their supply chains and having more efficiencies and building those better business models. And it's a bit of a carrot and a stick. So there's the carrot for them, just like for investors, to reap the benefits. There's also the stick. I do believe with the SEC looking at regulating scopes 1, 2, and 3, with the state of California having already passed into law that businesses that want to do business in California, the 5th largest economy in the world, must disclose scopes 1, 2, and 3. These things are paving the way. Now I would say we're looking down the barrel of fines and real materiality around this subject if people do not act. Okay, back to the FAO. What do you think it would take, let's say in a hypothetical world, we do go from 2.5% and 4% of investment to, let's say, 18 or 30% of the investments on climate change are in food. What kind of timeline do you think it might take to get there?
I'm not quite sure if I would see it getting to 30% of climate investments being on food, only because of that gap between the sort of $500 billion gap within food systems and the sort of trillions that's required each year, though I might be proven wrong, and I probably haven't got the data or the expertise of the World Bank. But that said, I think, if you look at portfolios now, and you look at the S&P 500, it's majority technology, not majority, but the largest share is technology, and that might be where the growth is. So whether you call it food tech or just technology itself, and that technology itself being utilized for things like understanding supply chains, understanding emissions in supply chains, provenance of goods, etc., which is really quite hard when you get to sort of tier 2, tier 3 suppliers. I think that technology and investment in that technology might be where you see efficiencies, and those efficiencies mean that it might rise from, whatever the 2 or 3% of portfolios that sort of consumer goods and foods, now might just double. But because of those efficiencies, the investment required is less, and therefore you see that impact happen more readily. I think the upside for investors that do get into whatever slice, whether it's an extra, a doubling of the current allocation, or whether it is actually a 10 times up to sort of 30%, those that do invest in those solutions, to your point previously, if there is increased regulation around supply chains, around emissions disclosures, etc., then there is going to be huge demand for those sorts of technology, and a huge demand for that greater transparency and understanding. So once again, the bang for buck is probably likely to be larger, because it isn't about rolling out large pieces of hard technology and installing them in certain places. It's really about building that greater efficiency. So I think hopefully those technological breakthroughs and that tech investing in sort of information technology, as opposed to necessarily capex on actual equipment will mean that the ability for investors to actually access those investments, so it's not necessarily always going to be through private markets or sort of obscure funds or in untested technologies. It's really going to be in investing in those technologies or engaging with companies to apply those technologies to actually build that efficiency. So whether it is an extra 3% or an extra 27% or whatever it might be, there's certainly a huge investment case for getting involved and allocating more to this transition.
Again, so much to unpack here. I will say, I believe it will follow an S curve. And to accurately quote the World Bank, they did not say that it will become 30%. They said it should. So let me correct myself there. But I do believe it will follow an S curve. So it won't be linear. You'll see investments start to pour in. The efficiencies are readily apparent. That will be positive reinforcement at the same time that we have environmental negative reinforcement to move quickly. And I think that will just scale from there. And really everyone is a winner, even the industry, which stands to have tighter supply chains and better cost of goods sold by tightening these supply chains. So plus their better sustainability numbers and avoiding fines. So everyone gains here, which means once the world opens up to this kind of information, there'll be very few headwinds. I mean, once we get out of a funky election year and a bad economy, I think there'll be very little in the way of headwinds. And so you could see this really culminating 25, 26, 2027 for this to be really an area where people focus. I'd like to say if there's any need for, let's say, a tangible understanding of the climate impact, one of the investment products that we have at VegTech Invest, we asked our third-party advisor to kind of look at the fund and say, well, what kind of global temperature warming impact does this basket of companies have? And it came to be that due to the efficiencies and of the stopping and creating of a sink, that it has a temperature global warming potential of 1.18 degrees centigrade. It's well below the Paris Accords, which we all know now that we're not even going to hit. Then it looked at the S&P 500 index, and that had a global temperature warming potential of 3.23, which is where the world invests. It's probably one of the most common investments products based on that index. So you see where we are, a global temperature warming footprint, and you see where we could be or what food systems offers. So I think that's kind of you can get more information on that if you go to vegtechinvest.com. But I think it's interesting to have, the global temperature warming in mind. One more thing to say before we end here, so much of a knowledge drop from you today. Thank you for that. Is I think it's encouraging, we're talking about all the work that the Institutional Investor Group on Climate Change, IIGCC, if you can remember that one, is doing. And I'm so grateful for your shareholder engagement. And I do hope everyone will go to the websites, which are in the transcript, and you can sign up and engage there or become a member. But you're not the only ones. I mean, FAIR has some great shareholder engagement. Mighty Earth has been doing some great work. I think of ISS, which those in the US will know as a proxy voting organization. They also have a research and ESG arm. They've recently come out with a biodiversity benchmark tool. So you can start to look at your investments and use their data specifically around biodiversity and nature. And so you're seeing more tools everywhere. This means more knowledge, more information. It's very exciting. I'll also ask you maybe as a kind of an exit question. Do you have any, you talked about novel technologies and garnering efficiencies. Is there any one technology that's caught your fancy or your fascination? Not as an investment opportunity, but just like
yes, yeah. I mean, I usually just stick to sort of to climate strategies and measuring alignment as opposed to giving out sort of investment tips or particular technologies. But I think there's some really interesting work being done, and not to be that person that just speaks about AI on an investing podcast because that's what you do, and trying to attract members or the like. But I think a previous role of mine, I worked at CDP, and they had a partnership with BCG and looking at using AI in sort of mapping supply chains and understanding supply chains. I think across climate, both in mitigation and adaptation and resilience, the interconnectedness and the systemic connectedness of everything and how they relate to each other. You can look at singular assets you invest in or the company you invest in, but without their sort of supply and value chains, as you mentioned, very much highlighted by COVID and some of the hangover of COVID, of how that can affect food availability, but also things like inflation. When you're looking, trying to look 2 or 3 tiers down a supply chain, it becomes very hard. And there is a lot of good work on engagement being done, as you mentioned, through work we're doing with Nature Action 100, FAIR, CDP, others. And so there is a lot of information that is being gleaned, but that's not necessarily all being pieced together. So, hoping that technological advances to sort of understand that mapping of interdependencies and supply chains, and also that data that's being produced through those engagements, can start to sort of become more open and accessible, so people can sort of understand the provenance of goods and services that they're procuring, and whether that be thinking about the climate impacts through carbon emissions or other greenhouse gas emissions of those goods and services, but also understanding the physical climate risks that are related to different companies and different resources, by their interdependency on other bits of infrastructure as well. I think that will be critical, a critical place for hopefully investors and many members of ours to invest in, and the large technology organizations who might control some of this information, some of these innovations that can give us this information into sort of meeting the climate challenge. And I think once technology can start working for us and understanding it, it's not just not-for-profits like ourselves producing reams of PDFs on how to engage and how to interact with companies that can actually start to automate what we do, and probably put myself and others out of the job, which for the right reasons would be a great thing to do. I think that would be a great place to sort of start thinking about where we can invest to get the most impact, and sort of tie together those two big secular shifts in sort of climate and sustainability, but other things like digitization and artificial intelligence, and sort of getting where we are. I don't know of anyone doing that particularly well, but I'd say if someone starts to, that would be a good place to start investing.
I couldn't agree more. I think AI is going to have a very rapid impact on transparency. Now we're back to the carrot and the stick. This is a wonderful carrot for consumers. They really get to see, hey, where was my stuff made and how was it made? This is an awful stick for industry, because now everyone can, a lot of industry's been hiding for a while, and I think AI is going to turn that on its head. I am excited about a technology that is not a new technology. Again, one of the underscoring principles of food systems transformation. I'm excited about fermentation. Now, the world has been fermenting beer and bread and yeast and tea, kimchi, if you like kimchi, which I do not. That fermentation is nothing new. But when you're looking at fermenting clean protein like microbe, neither an animal nor a plant, you can ferment the amount of protein of a cow, which would take 1.5 years, and all that deforestation, all the land and water, and you can do that in 3 to 4 hours. So we haven't talked too much about food insecurity here, really focusing on climate change, but another mandate for many is, in fact, I just got out of a meeting with a large international bank of Latin America, food insecurity, not just for the Middle East to worry about, but also other places. You see that ability to create more protein using less resources, creating less damage in a shorter amount of time. It's a very interesting mandate. And so I'm interested in revitalizing the old techniques, if you will, of something like fermentation, which of course needs to be tweaked from where it is now, pharmaceutical grade often, which is a different price point than commodities, so of course it needs some investment, but I think there's a lot of interesting things being done around precision fermentation for proteins, for example. And then I'm very excited, again, using the word precision, about things like precision watering, back to that ag tech technology where you really focus on just watering what you need. Israel's focused on that for a while, but other technologies with drones, et cetera, making regenerative farming and crop rotation and finding the least the crops that need the least water, that can have the most precision watering for the bettering of the soil, as well as the food that's created. I just think there's a lot of really interesting technologies. We watch all of these, of course. I do have one more question involving a tip, I'll say, but it is not an investor tip. If you're having a very busy day, what is your go-to snack that you recommend?
I'm not just saying this because I'm on the VegTech podcast, but falafel. Apparently, when my mother was pregnant with me, she was a hippie. She was a vegan, and she ate a lot of falafel, and that's my comfort food. And it sort of sits somewhere between the line of healthy and also delicious fried food. So it's pretty good for most situations, and you never really, whether it's in a wrap or a bowl of falafels or whatever, you never really feel like it was the wrong decision afterwards. So yeah, my go-to is definitely falafel. I would dare say I'm a bit of a falafel snob, so I have a pretty good rating system of different Middle Eastern restaurants and their falafels.
When I'm in London, I'm going to get your recommendations. What I love about falafel is, appealing to Gen Z, it goes with you. So you don't have to sit down for falafel. You take it where you go, you're on the move. And that's how everyone eats nowadays. I can't remember the last time my family sat down to dinner. Everyone's just on the move and eating on the go, eating standing up, eating walking around. So falafel can do that. So very exciting. Very fun about your parents. Although I will say, for the record, as we talk data and stats, not all vegans are hippies. In fact, all of my main contact at my custodian in US Bank is a vegan, and she is not a hippie. Just for the record, I think what has come to my attention in this podcast is that it is almost possible to do an entire podcast with just acronyms: ISS, IIGCC, FAO, FAO, BCG. I mean, I don't know how everyone keeps up, because it's basically a podcast episode today of just acronyms. I want to thank Mahesh Roy, Investor Strategies Program Director at IIGCC Institutional Investor Group on climate change, having shared with us such a knowledge drop today. I really do appreciate it. We're going to have all these links in the show notes, the transcription on the New York Stock Exchange platform, etfcentral.com. You can find them there if you would like to become a member, or if you would like to participate. I imagine your shareholder engagement is not members only. Is that correct?
Generally, shareholder engagement, so generally members of the networks. So we work with various investor networks. So usually they are members only, but quite reasonable fees for quite a lot of work we help our members with.
Okay, wonderful. So you've got your mandate, folks. You know what to do. And of course, if you have any questions, you can always find Mahesh Roy on LinkedIn. You can find me, Elysabeth Alfano, on LinkedIn as well. I want to thank everyone for joining this podcast. Mahesh, don't go away. Everybody else on LinkedIn, YouTube, and X. I will see you all in a few weeks. Bye.